Bismillah ar-Rahman ar-Rahim. We'll continue with some exercises. The first exercise we are going to look at is that we have 3 years of balance sheet and income statements are given, and there is some data missings like A, B, C, D, etc., and we have to fill that data. You can see that the line over here is showing that above this line we have balance sheet, and below this line is the income statement. I will take you to notepad, and there we will do the exercise. So let's move to the notebook, OneNote. Okay, we start from finding the A, and it's easy to find A. A is because it's a balance sheet, so here we have the liabilities and stockholders equity is given here. So we sum these numbers, and these numbers are equal to 1400. Then A is equal to 1400 because assets are equal to liabilities and stockholder equity. So A is equal to 1400 and minus these numbers here, 100 plus 400 plus 250. Okay, let me clear it up. Plus 250 and plus 600. So what we get is A is equal to 50. Okay, so we got A. Now let's try to work out B and C. For working out B is easy. B is just the net income, so sales minus expenses is B, and so B becomes equal to 500. 100 minus 500 is 500. 1000 minus 500 is 500. For C, we can see that you can see net income is equal to dividends plus current retained earnings. Now the retained earnings, assume that the retained earnings of 2015 were 0. Okay, so the retained earnings shown in the balance sheets are the current ones. Therefore we can find out what is C. Then C will be equal to then net income is 500 minus the current retained earnings, which is 100. So we get the dividend is equal to 400. Okay, so let me write it down, all these numbers here. Then A is equal to 50, we have B is equal to 500, and C is equal to 400. So I'll just remove all this now. Let's go to 2017 now. 2017 we have D and E and F. Now you can see that we cannot work out D and E because we don't know what these values are for balance sheet. But we can work out F first, and from working F we can work out then what are our retained earnings, and from their retained earnings we can find out the E and then of course D also. So let's work out F first. F is equal to net income plus expenditures will give us the sales. So we have 800 plus 800 will give us the revenues or sales, which is 1600. F is known. The dividends are given, so we can find out the current retained earnings. From this equation here, we can work out the current retained earnings. The dividends are given 0. Therefore, the net income is 800. The current retained earnings are then equal to 800. Now for E is cumulative retained earnings, because in balance sheet we have cumulative retained earnings. So this means that E is equal to current retained earning 800 plus the previous year retained earning 100. So what we get is 900 here. All right, and we have F, we have E, and we can now work out D. We have just D will be equal to, just put over here 900. Then 900 plus 1000 400, which is equal to 2700, right? No, sorry, it is 1000 plus 4 2300. 2300 is the liabilities and stockholder equity, so it should be balanced with assets. So minus these 500 plus 400 plus 350 and plus 250, and what we get is D is equal to 800. Okay, so for 2017 we have worked out all that. We can write it down over here, D, E and F. The D is equal to 800, E is equal to 900, and then F is equal to 1600. We can now remove that. And we can also remove this one as well. Okay, so now we go to, remove this one also. Now we move to 2018. In 2018, G, H and I has to work out. G can be easily found because we have all the assets mentioned there. So G is just the that summation of this one minus these will give us G. So let's work out G. G is equal to this summation is 6 plus 5 11 plus 4 15 plus 12 27. So this is 2700 minus these 9 plus 9 is 18 plus 600 2400. So it is G is coming as 300. All right, so G is there. For H and I, now the dividends are given. We can work out what is the net income. Now you can see from here that E was 900 previously, and this one for 2018 also 900. This means that annual retained earning for this year is 0. The current retained earnings are 0. Then the net income should be equal to the dividends, which means that I is equal to 500. All right, and then H is equal to 2000 minus I 500 will give us the expenditures, which are 1500. That's it. So again, how did we work out I? I was easy because we have the net income is equal to dividends plus current retained earning. We found the current retained earning 0 because from here 900 is given, 2018 retained earning, and 2017 were also 900. So this means that the current annual retained earnings were 0. And since the current retained earnings are 0, then dividends is equal to net income. We have 500 dividends, so net income is also 500. That's why we got I is equal to 500. And then H is of course easy to work out.